Hi, I'm Keith McCullough, and welcome back to another Real Conversation. I've had a lot of these over the years, and I got to say, from time to time, I'm having a discussion with somebody that I've A, never met before in person, and B, don't know a lot about what he or she does. And in this case, that certainly applies with David Dorr. He runs Dorr Asset Management, or Dorr, I think it's Dorr Capital Management, or Dorr Asset Management. It's got to be something with the Dorr on it, right?
That's right. Yeah.
But welcome, David. I appreciate you making the time for us and talking about some things that a lot of people don't frequently talk about.
Yeah, Keith, I appreciate it. Pleasure to be here with you.
Yeah, I like to say I have a go anywhere global macro strategy, but like you've redefined what going anywhere really means, and we're gonna really kind of get into that. The difference between maybe what I do and what discretionary macro looks like. So we're gonna traverse a lot of topics here, but we'll start with the big one. You have so much experience, first of all, building these types of platforms and watching this crypto universe, or whatever you want to call it at this point. Watching it evolve, seeing the fraud, seeing where we've been. Yep. Maybe just give you like an opening volley on that. Like what did you think about FTX, and where do you think we're at? A lot of people like to think that it's that was it. It's all up and away again, right, and we can just go back to where we were.
Yeah, so with FTX in particular, so while my background is in discretionary macro, what's unique with FTX is, and my views on it were informed from the other part of my career, which was in fintech, and involved fintech in a very regulated environment. My most recent fintech was involved with maintaining money transmission licenses in the United States at the federal and state level. And what basically informed our views with what all these guys were doing was that it didn't make sense from an anti-money laundering, know your customer perspective. You could just look at the holes, and the holes were all over the place, that these guys were kind of skirting around things, if not just blatantly breaking the law. And we saw that from early on. We actually went to the attorneys for the Miami mayor's office and told them that putting FTX's name on the Miami arena was a really, really dumb idea and something that they would regret later. And here we are. Now, did we predict that it was going to be such an implosion as we've seen? No, we certainly didn't. But the writing was on the wall that whole ecosystem is really polluted because there's a lot of conflicts of interest. You have an exchange that's acting as a broker dealer, as an exchange, as a custodian, all these things all at once, as a credit provider for leverage. You have all those things packed together, and it's a recipe for disaster. And that disaster is not done, right? Binance is still lurking out there, and we think Binance will blow up as well.
I mean, we've talk about traversing planes. You go from legal fraud, people getting away, with it because everyone's making money and putting, never mind that, like having the Formula One race, sponsored by FTX in Miami, et cetera, to now everybody lost the money and it's going to get regulated. Right. How do you think that through? Because, your main point is just that. It's like there's nothing else in, never mind the world, but certainly in America, that is allowed to exist in this current operating structure without the regulations. So how do you think that plays out, or do you have an opinion on that?
I do. So here's the real thing. This is where I think we kind of separate what's good from blockchain, and what we use the broader umbrella term distributed ledger technology, because blockchain is really just one type. And so what I would share with everybody is that there is unique opportunity, and the idea of digital assets. Some of those may function as a commodity. Some of those may behave as a currency or an equity or something else. That's fine. There is opportunity in the broader digital asset category. The problem, and the reason that we have so many scams and issues, is that technologically, tokens are unnecessary. The tech has evolved so far beyond that, but nobody discusses that because the money is in pumping and dumping tokens. And so you just see this really toxic system. I think the regulatory landscape, the SEC is just absolutely, mounting a complete attack on crypto, and in many ways, rightfully so. It will clear that stuff out of the system, and we'll be left with kind of the good tech that's out of there to build digital asset, ecosystems, and that will be okay. But we're a ways from that. I think we're still at least another year out before that gets all separated out.
I mean, I look at it like it's quite literally like going to the casino, and people might use that analogy loosely or not, but I mean, to me, it's just things that are moving on a board. I mean, it could be watching a game of Keno, for God's sakes. I mean, but
exactly,
like if you have like this morning, and when I wake up in the morning, I just try to show trending and non-trending price movements in anything macro. And recently I've been highlighting the moves, like if you, in crypto, for example, like today it's Chainlink, Uniswap, Ether, Algorand, like this shit really moves around. I mean, and people really are chasing it again. So what would the board, is that board going to get eviscerated, or is that just going to stop and it's going to have, SEC regulated, broker-dealer rules regulated, and we're just going to have a, like, does it just stop? Like, do you just wake up one day and you're like, oh my God, I own this stuff?
Yeah, yes, definitely. I think what's going to happen is that, so one of the problems too is that, and this is why we've never played in crypto. Like, look, I'm a macro guy, I'm a trader. If it moves, I'll trade it.
Yeah, me too. I'm like really interested, but I don't want to wake up to, whatever the hell Uniswap is and having, my account decayed. I mean, that doesn't make sense.
Yeah, well, take a look at I can't remember the guy's last name, but there's a guy that was recently charged by the SEC, Avi something or other. He was actually manipulating these DeFi exchanges and these protocols. So he was using these kind of, loopholes or exploits, almost hacking them and manipulating manipulating those markets. And so now the SEC is charging him. So what you have is you have highly, highly, highly manipulated markets beyond the fact that they're not regulated. They're actually just outright, most of the volume is just wash trading. Just straight up wash trading. And people forget, by the way, Coinbase was, charged with these things, and had to settle with the CFTC right before they went public. So this is not a new concept. And what people, what's really going to blow up the ecosystem for the better is when Tether goes down. Tether is absolutely, in my personal opinion, just a criminal, syndicate. And that needs to be flushed from the system. And that will probably be kind of the last phase. And then it'll get interesting.
Tether's a criminal syndicate. Now, I know somebody pretty well that's doing, I can't spill the beans on it. Let's just say that he's doing a tell-all on it. And he is he would call it the same thing. And you're a bright guy, and he's a bright guy. And it's not about being bright. It's actually it's about being able to put something in context after you have all the experience that you and the gentleman that I'm thinking of have. I mean, that's quite a statement. And I don't know. I wouldn't know Tether from Uniswap if you stuck it right in my face. I don't know.
Sure.
But I'd believe that they're frauds if you told me. If somebody with a reputation, because you're not in the business. We've checked you out. Obviously, you're not in the business of being just trying to make statements. Can you just elaborate on that on Tether specifically? Why?
Yeah, sure. Yeah, and so and exactly. So with my statements, for the record, I have no position. So I'm not long or short on this or anything else. So I'm speaking just from my area of expertise. So one of the things, so as part of that fintech background, working in a regulated environment, and so we're based in the Cayman Islands, we're regulated there. I know offshore banking and offshore systems really, really, really well. And the thing that caught our attention many years ago with Tether was that, so for example, if I operate as a money transmitter and I am custodying client assets, there's so much regulation for that. And banks that provide those services are very, very limited. Why? Because the risk for criminal activity is extremely high, right? So because they can't peer into those accounts. So if I'm managing 1,000 customer accounts in an omnibus account for moving money around, the bank doesn't know whose accounts those are. Now they can knock on my door because I'm regulated, and they can ask for it from time to time as an audit or an inspection, but day to day, they don't know who it is. So what we noticed was that Tether they were actually tricking banks. So fraudulent activity just to open the account under all types of different names, not just the corporate name. And they were using those as omnibus accounts. By the way, this is not too dissimilar from what was happening with FTX, where money was actually being wired to Alameda, which then flowed over to FTX or never made it to FTX. So Tether's been doing that from day one. And so we spotted that from early on, and we were like, there's no bank in the world that has proper compliance that would ever permit that, ever, zero. So that's why we've had that thesis from the very beginning. And I think the only reason they operate right now is because there's so much criminal activity linked to it that's very valuable for investigative bodies, whether that's the FBI, working with the DOD or other international agencies. I think that's the last thing outstanding, and then that whole thing just melts to the ground.
Well, I mean, tricking banks, opening accounts. This is the most basic example that at least our audience would be familiar with is Silvergate, Alameda, the whole game within the game that Bankman-Fried was playing. Not explicitly through FTX, which the clients probably all thought that's what they were doing. But tricking banks, opening accounts, I mean, this is like, how long can it or will it take for the FBI to just walk in and say you're done? I mean, it shouldn't take that long.
Well, so this is our theory. We don't know. I'm speculating here, but again, having been around regulatory environments and having investigative agencies around, they're always knocking on doors for purposes. It's not uncommon for an investigative body to work with an institution and keep it open so that they can monitor what's going on. So I admit, yeah, I mean, there's so much criminal activity going on. If you think about it, and that's the irony of the blockchain. Everybody thinks that the blockchain's all anonymous. No, it's heaven for investigators because you can trace everything. So that's what we suspect is going on. And when they kind of wrap up their criminal investigations, of which there's probably hundreds, then I think you'll see them shut the system down.
So shutting it down, that's basically when I said DK my account or my account no longer, there's nothing. Like, so there's going to be a moment, you think, in time, in the not so distant future, where it's literally shut down. No more trading polka dot coins. It's over.
Yes, correct. And as it relates to Tether specifically, it'll be two things. So one is it'll be shut down of any accounts that they actually have. So somebody is providing, accounts for them. Now, Silvergate was probably one of them, Signature Bank, Deltec in the Bahamas and others. But there's two aspects to Tether being shut down. One is the accounts where there actually is money, and then shutting them down operationally, technologically, where it's just fake money. I personally believe that the majority of the tethers that are outstanding is just, it's nothing. That's just it's a bullshit, entry on their digital ledger, and there's nothing there.
Now, what I guess I want to get to some other topics. Some people might want me to talk about this with you for for the next 45 minutes, but we have other things to talk about. Like if you take the people, I just try to boil this down to what you're talking about. You have an opinion on this. I'm trying to get to okay, communicate to the people this is your risk. You're still holding this risk after FTX and everything you've gone through. You're still willing to trade Chainlink, Uniswap, Ether, et cetera, Tether. Right. How many, I don't know if there's no percentage, but what level of awareness of people that are either in this stuff, participating in this stuff, back in this stuff, whatever, do you think actually understand what's going to happen here?
Oh, that's an interesting question. So we've looked at this. We've looked at the institutional firms. So there's some, without naming names, there's some very big prop firms that are, of course, in this ecosystem, right?
On the broker-dealer side, too, to your point, which is frightening.
Correct.
Because the rest of their business really does not comply with these types of
Not at all. And there's one of the prop firms, Phil, there was a hack on a protocol about 2 years ago, and this prop firm filled in a hole of about $300 million just overnight.
Wow.
Now, yeah, look, you come from the trading business, so do I. Like, I don't know anybody that's like, oh, somebody else, hacked this, but because we want to help protect the ecosystem, we'll just, stroke a check for $300 million overnight, and everybody's good. Let's keep playing the game. I mean, that to me is just a screaming red flag, and is suggestive to me that some of the more sophisticated players have a really good understanding of what's going on.
Oh yeah.
I believe that some of the prop firms have mistakenly put the authority to trade crypto in a younger generation that may not be disclosing or conveying the actual legal risk underneath that stuff to management. So that's my view. I think there's some smart people that know exactly what's going on.
Well, this you can just see. Okay, for something that I actually trade, like Bitcoin, that is it's as visible to me, without naming names, as ODT option trading and SPYs and Tesla. To me, it's it's actually all the same thing. I mean, the same thing. And when they do it over and over and over again, I've thought about this a lot over, it's embarrassing or dating myself, but 25 years on Wall Street almost, for a quarter century, the question in my mind is, why is somebody willing to take on orange jumpsuit risk? Because as a matter of principle, I would never do that to my firm, my family and firm in that order. But the sad answer to the question is that you have to pay a very small fine, $300 million for somebody who'd made, if you make 10 billion, who cares? I mean, what you're going to keep the game going until you get fined. To me, there's a very small percentage of people in the world that run a shit ton of capital that are willing to take that risk until they're, the fun cops come in, the orange jumpsuits go on, and those orange jumpsuits, it's really hard to get one on somebody, by the way. We've seen some really bad shit happen across capital markets for the last 25 years, and it's really hard to do. But then you have the larger sum, like 99% of the people participating don't have the 1% of the flow, the order flow, the intelligence. Like you're saying, these guys know exactly what they're doing. And the people are the ones that are getting picked off or getting pushed. It's not any different to push me to buy Polkadot if you're going to buy Tesla. They're the same, same retail investor who wouldn't know the difference. I mean, they don't know what the fuck they're doing.
Totally, I couldn't agree more. That's actually a perfect analogy, Keith.
So so I guess we're agreeing to agree that there's an institutional force that is allowed to get away with it until they're not.
Yes. Yeah, that's my view. That seems to be what we're observing in real time.
No, I mean, it's not. I mean, Silvergate is so small ball relative to what we're alluding to here. I mean, it's tiny, and the level of sophistication those guys had. I mean, Coyotes is hilarious on it. I mean, he's like, these are just like. There's one thing to lie to people. There's another thing to just be dumb. I mean, like to be numb and dumb about it. I mean, anyway, okay, good. So we spent 17 minutes on that. I can go on and on. We have to bring you back, man. This is big time stuff, and a lot of people are going to get hurt if they don't listen. Same thing that Coyotes said. You're saying it in different ways with Tether with a different thing. Something I've tried to trade. Okay. And everything that, like you said, I mean, I will trade cattle futures. I'll trade anything that ticks, provided that it's a market that I don't think has a front runner, somebody on both sides of the trade. That's where I don't trade what we just talked about, because it's just like ridiculous. It's like trading against the house. But European commodity markets. So and there are a bunch of ETFs that have to do, whether they be these carbon offset credits or renewable, this, that, and the other. There's almost like an ETF for everything. There's not a lot of liquidity, but the ETFs still print the volume if you want to trade it. So I'm really interested in that. Can you just give people first, tell them what that is, and explain to them what it is and how you trade it, and then hopefully it'll tell me how not to trade it. All the mistakes that I've made so far.
Sure, no problem. So what I'll do is I'll try and kind of maybe break this down into a couple fundamental pieces. So everybody certainly, listening to this right now is familiar with the ESG movement and all the problems that go around that, right? Like most of ESG is just completely nonsense and is crap and doesn't work. The real opportunity with what's going on in environmental legislation and climate change legislation is specific to environmental commodities, which is where we focus, and we've traded those types of assets for 13 years. So while there are ETFs for these instruments, we prefer the futures contracts. The futures contracts, for example, in Europe on European allowances, which is the largest traded market, that's about 200 billion in volume annually. So not a bad market at all. Plenty of liquidity in the futures instruments. That market's very interesting. And what we've noticed is kind of going overlooked because ESG gets all the headlines. That's a very political issue in the United States, obviously. Different political parties having, stances on that. But in Europe, it's not as controversial. So in Europe, you have the Fit for 55, which is the idea of reducing emissions from where they're at right now by law. Okay, so this is a big difference. This isn't voluntary anymore. It's by legislation, 55% reduction by 2030. That is no small feat. And so that creates all these just kind of waves, macro waves that, you and I would be looking for, right? And a lot of those, one of the best ways to express that is in the instruments. So European allowances, for those that want to play, that is the most liquid market to be able to do that. One of the other areas where we're
just to take a step, not sorry to interrupt, but there's 200 billion. Like if you add up all these certificates that actually trade in the futures market, that's what you're saying that market's that size?
Yep. That's correct.
The European market bigger than I thought it was. Wow. Okay.
Yeah.
And then the ETFs that I'm looking at are just based on the underlying for those ETFs are those certificates.
Yeah. So you'll see the ETFs. I believe that there's ETFs now. We don't trade them. I haven't looked at them for a moment, but I know there's a handful out there. And I believe that there's, if I'm not mistaken, they have three types. They have the regulated market for Europe. The second biggest regulated market is for California. So there's allowances for the California market. And then the third type, which is growing and did about 2 billion in volume last year, is the voluntary carbon market.
Okay.
So the voluntary market is unregulated, and for companies that want to offset their carbon footprint, they play in that market. Now that market is growing very, very, very quickly and is really interesting. We're super active in that, but that's 95% of that market's an OTC market.
Well, I mean, on the ETFs, I mean, it's actually like, so for example, I mean, Crane Shares basically has most of these. They have the California one. I was just quite literally looking to trade this KEUA, which is Crane Shares European Carbon Allowance ETF. So I'm like,
yes.
Like again, if that was like, if I was trading butter futures, I would trade that. I don't care because I just trade the math. What I really care about is that thing real? Like back to the crypto point. And you're comfortable with the, not to get you into analyzing Crane Shares ETFs, but you're comfortable with these are real things. These certificates are real. Whatever your political opinion is doesn't matter. There's a mandate, and they trade because they're based on something.
Well, I'm glad you asked. Yeah. So on the regulated market, absolutely. So Europe has fleshed out their market. So if you're buying the Crane shares and the underlying is the European allowances, that's an instrument that people can take a view on with confidence.
Okay.
The voluntary market is a bit different. So there's similar to how you would have, a Fitch and S&P and different rating agencies. You have these certifying agencies in the voluntary market. And there's a whole movement towards harmonizing the integrity for the methodologies for a voluntary market. So I would caution anybody, if there's an ETF, whether they're playing in the spot market or they're using access to it through an ETF, I would be very delicate with the voluntary market. We actually have a net short position in the voluntary market, and we're long the regulated market. And there's a lot of underlying reasons for that trade.
Yeah, it's crazy that we're not talking about crypto anymore, but it's the same point, right? I mean, I'm gonna go with the regulation. I'm not gonna go with this voluntary thing. It's crazy words to use, right? I mean, like again, for 20, 25 years, I would never thought that you could just trade everything on an unregulated or a voluntary basis. It's nuts.
It is.
Okay, so on these things, like what would be like the number one? Like there's biodiversity credits, there's carbon credits, there's like what is like the best? What's your best long in that space?
By far the biodiversity credits, and I'll explain the rationale for that. So biodiversity credits, we're actually bringing to market right now as we speak the very first international biodiversity credit trade. So this is a very interesting transaction, and so obviously this is me talking my own book a little bit here.
What do you mean you're bringing it? Like What do you mean by that? You're bringing it?
Yeah, so the way that credits are generated is from project developers. So this is off a Habitat Bank in Latin America.
Oh, okay.
We bought the credits, and so these are over-the-counter transactions. The end buyers for these credits that retire them so that they can claim the benefits of conservation are typically multinational corporates, and usually out of Europe. Mm-hmm. And what they do is they buy these. So there's a task force called the Task Force for Nature-Related Financial Disclosure. And what it's doing is it's following the path of what happened with climate reporting out of Europe. So in Europe, we've got Scope 1, Scope 2, and Scope 3 reporting to look at carbon footprint across supply chains. So there's now coming right behind that, but much faster, is the same type of impact reporting for nature. But to simplify that, because it can get really complicated real quick, I want to explain the longer term thesis. Like this is something that we're bullish for the next decade at least. The issue is as follows, Keith. Conservation doesn't really have a price. We think of that as a charitable aspect, but conservation, nature is what underlies our entire economy. You can't pull a barrel of oil out of the ground. You can't, have clean energy, whatever you're into. You can't make computers or laptops. We depend on obviously the planet to do that. So there's been a movement now for about a decade and a half to start to price what's called ecosystem services, almost like you would a utility, right? So a wetland, helps filter water. Okay, well, that's kind of acting as a utility. How do you start to put a price tag on that? That's now starting to come together. And what I tell people, this is, if you want to really see how interesting this is, don't take my word for it. I want everybody listening to this right now, just Google New York Stock Exchange and the words natural asset company. And it's amazing this has gotten almost zero attention. I haven't seen the Wall Street Journal or the FT reporting on this. So the New York Stock Exchange has filed listing standards with the SEC to create a new type of public company which is called a natural asset company. And effectively, it would be like you and I took a habitat bank or a piece of land conservation with endangered species, and we were able to IPO it. So if people thought the SPAC movement was interesting,
Yeah, this is
next are going to be a whole different level.
Yeah, I mean, and it's actually real. I mean, that's the other thing, like, I mean, some SPACs are real, but, obviously crypto in many ways isn't. I got this is that is amazing. I just looked it up. I did what you told me to do. It's a nice, very green looking leaf, and the contours of an ocean line or the edges of a leaf are defined by fractal math. Why not start to trade this stuff for real?
Well, exactly. That's our thesis. And what will really blow you away is when you have some time, after this, the show, take a look at the video on there. And what you're going to see is a stat directly from the NYSE. The video is beautiful. It's hard not to be moved by, pretty pictures of nature. Who doesn't enjoy nature? But here's what's going to strike you as interesting, besides the fact that they've done this listing standard with the SEC, is that they're calculating that the value of nature on an annual basis, payment for ecosystem services, is $100 trillion a year.
Holy
so this isn't
cow.
Yeah. So this is. Yeah, exactly. So this isn't just something that's going to be like a little niche market that's sitting over in the corner. Like, we think over the next decade, this has the potential to be an interesting and significantly sized asset class.
I had zero idea. Not like I mean, but if I'm going to trade like milk futures, I'm definitely going to trade wetlands. I mean, this is
of course.
It's really, and I do think that this is, at least for me, like, if you don't mind me saying, but from my perspective, if you give me the price, volume, and volatility of any asset, and there's a real underlying, then I know what to do with it. I mean, at least in terms of at the base layer. So for me, this is really exciting because we get away from, okay, let's go believe this guy with a ticker that's Nikola, that he rolls a truck down the hill and says that it actually works. I mean, this is like, there's so many things that suck the people into believing, because they want to believe that there's something different than the bullshit that Wall Street or all the scams and frauds. So there's an unbelievable demand, but now what you're saying is, here come the underlying. Like, this is a major. How long has the New York Stock Exchange been working on this one?
I believe that they filed the listing standards at the end of 2021.
Okay.
And so it's in process. Nobody's done one yet. I don't think the listing standards have been approved, but it's well in process. And you're going to see, I'm telling you, Keith, this stuff is coming like a freight train. When you kind of peel back a couple of the layers and you look at the macro stuff going on underneath, take a look at what's happening at the COP27 and the COP15 event. So COP27, that made, several headlines globally, because that's where carbon's being talked about. All the politicians, flying on their private jets, and, they make all these stupid, emissions in the air, just like Davos. It's a complete hypocrisy. But here's what people weren't paying attention to. What people don't know is that the United Nations runs a parallel conference, which is dedicated to biodiversity. And that parallel conference is called COP15. That was the last one that they did in December of last year in Montreal. And what came out of that again, unless you're kind of, watching this niche sector, most people, would be forgiven for not having familiarity with it, is that what came out of that was the equivalent of the Paris Agreement, but for conserving nature. Now, this is a lot more useful because, again, to your observation, we're getting to the underlying. So we're bearish ESG equities and bonds. We think that that's just a lot of fictitious nonsense. But the underlying, we're very bullish what we would call, environmental commodities. We think that there's a legitimate, a legitimate case for those asset classes to exist.
Yeah, one of the best investors that I know, he's not a billionaire for no reason, always says this. Like, he always says, look, these elements of nature, and there are a lot of them that have traded, for a long, long time that aren't new. Like, if I tell you that you should start to think about buying rhodium, you know how to do that, right? I mean, it's not like, and he's made so much money over the years just playing a game that he believes in, and that not as many people participate in. There are many more people that are trying to get Google and Apple right every single day than obviously doing something like that. But this would be, right up his alley. It's right up my alley, obviously. This is really interesting. I didn't know most of it. The last question on this, because I want to get to the next topic. But so NYSE, that just implies that we're going to actually have listed tickers?
Yes, that's correct.
So how, you know, like, can you give me an example of like how that might look? Like we're gonna have a ticker for water, we're gonna have a ticker for, I mean.
Yeah, not the commodity, but think of it like, I'll give you an example how we're speculating that this would play out with this new instrument. So in the United States, we're familiar because a lot of habitat banking, the concept, has been around for decades in the United States. And what would happen is if a developer comes in and they're going to be developing, a new apartment complex, in or near a wetland, they would then have to offset the damage to that wetland by preserving another sector of that in perpetuity. Okay, so that's kind of the original, area where this came from, and now this is spreading globally. The idea is as follows: you come in and let's say you put a trust or land easement together that is going to preserve and conserve that nature. Okay, and then you can take that entity and you can list that on the NYSE to raise the capital to protect that conservation. That's how it works. And then the cash flow from that, to make cash flows on that nature and to kind of create a dividend, if you will, would be selling biodiversity credits on an annualized basis based on the value of the payment for ecosystem services.
Wow. This is
different stuff.
This is cool. This is cool, man. And the other side of the trade, I mean, there are so many things that I'm thinking about. I have to keep thinking, but I can be higher conviction shorting ESG frauds because you're going to replace all the market cap that's been allocated, the bullshit that's been allocated to that. I mean, people call things like Ball Corp or like whatever ESG. They have plastic in absurd. The cans. I mean, it's like.
No, it's absurd.
But it's whatever. I can go on and on and on, but you're going to replace the bullshit with market cap that's actually allocated to the underlying that is environment. Okay, I get it. I mean that's really cool. That's a big short trade too, and it's also inflationary. When you create like an ongoing asset, when an asset class can be marked to market, that you have to have, and there's a scarcity value of the underlying. That sounds longer term structurally inflationary to me.
I would agree with you.
Okay, good. We don't disagree with much yet, and that's partly because 99% of what you've told me so far I don't know, so I wouldn't know how to disagree. But give me. It sounds like you're going to have to give me like another half decade or a decade to catch up to you on this stuff, and then maybe I'll disagree. And when I do, I'll probably be wrong anyway. But anyway, so the third topic. This is like I literally went to. I went to Rob Milburn, who's one of my partners here. I'm like, is this right? Like, are you just like fucking with me? Like, sometimes these guys could put it in the notes that you might want to talk about something else. But it's like you want to talk about galactic macro and UFOs. Yeah. Like, okay. That's right. And I actually, ironically enough, right before this, complete irony, I shorted an ETF that is, the ticker is literally UFO.
Really?
But it's bullshit, right? It's like SpaceX or whatever. It's like it got all the. It's like shorting Lucid or Nikola. Like it's like one of these ETFs. It's just people have really been fleeced, right? I mean, they create ETFs that give you a perception that you'd like to be long, but it's got like Gerber Kawasaki inside it. I mean, come on. I mean, it's. So what is galactic macro?
Yeah, so this was just kind of, tongue in cheek, something that I started saying on Twitter, I don't know, about a year ago. And the reason for it is that in 2017, so first of all, let me kind of back up and put this in chronological order so people don't think I've lost my marbles, is that as a Gen Xer, growing up on X-Files and E.T. and Independence Day and all this stuff, the whole kind of UFO and sci-fi theme is something that, we grew up with, right? And this was, household, dinner table conversation. My dad was into, reading books on this stuff. And so for fun, I had a lot of familiarity with it just growing up as a kid because it was a household topic. But when this became an actual serious topic from a career perspective, when we started looking at this, was in 2017. So in doing discretionary macro, one of the things we look at is like we try and track interesting potential pivotal policy changes. Mm-hmm. So Fit for 55, which relates to the changes for climate in Europe, is one of those. It's a big policy thing, but amazingly, a lot of people aren't really tracking it closely. So in 2017, what happened, and the reason that UFOs are relevant, and that's hence the galactic macro tag, is that in 2017, the Department of Defense did something they'd never ever done previously, is that they acknowledged full chain of custody on the release of UFO videos that were published. published. So the New York Times published this in December of 2017. And I stepped back and I said, holy crap, this is insane. I can't even believe that it's real, that, New York Times is covering this, DOD is acknowledging that. And to jump you forward real quick here, Keith, is that has now led over the last 5 years to two versions of our National Defense Authorization Act 2022, and the most recent one that was passed in December of last year, the National Defense Authorization Act of 2023. Within that, you're going to find 38 pages dedicated to providing resources and an intelligence collection agency for the entire intel community on this phenomenon. And what's going on here is that, as I always explain to people, so I always look for things that might have inflection points with exponential movements. Mm-hmm. And what's happening is that we have our own military, credible people, plus backed up by data. So I'm not a guy that just like, hey, somebody thought they saw a UFO in the clouds. You want to see radar and sensor data that's been validated, and ideally multiple sources of that, which we now have. That information now exists and has been documented. These guys are seeing stuff in our airspace that is defying every known physics that we understand. And the understanding, too, is that this is not our adversaries, that this is being cited as off-world craft. That is a real quote, off-world craft. That is what's in is what's in documents in our current congressional hearings right now. So this is not a small issue, and this is mind-bending too, because if this is the case, and we do believe it to be so, then this is going to change the ratio of questions to answers enormously, right? For every answer we get out of this, you're going to have 1,000 questions that spring up from it. And so we're spending a lot of time looking at that and trying to understand how this is going to play out, because without a doubt, this is going to have impacts on markets.
I'm long defense stocks, not defensive stocks, yep. But military stocks, for example. And of the top 10 reasons I'm long those, this is not one. Let's be clear.
That's fair.
But of all that intelligence, is it embedded in the public equities, or is it impossible to say no to that question?
Yeah. So what we believe is, so we're long the defense companies as well. Okay, and for the reasons that we're both probably long those, plus the UFO aspect. What we believe, sincerely, having really dug into this, and not just like, over a month or a weekend and, drinking some beers and smoking a joint, looking at this, like, really looking. Is
that how you roll?
We've peeled back the layers, and we actually believed that this technology is sitting with U.S. defense contractors.
Awesome.
That they have. Yeah, which is mind blowing. So, as I was commenting to, Grant Williams, who, and is a great guy, saying that this is something that we have to think about, is that if they're sitting on this, and we believe that they are, does that make defense companies energy companies? Because you're now talking about a type of energy that's completely different than, look, who's not a uranium bull, right? Like, all of us in macro have been talking about uranium for several years, lots of interesting, trades with that. But this is a very different, very different viewpoint. If we have anti-gravitics and we have power sources that, are, very different than what we've been familiar with, that's a game changer.
Dude, anti-gravity technology? I mean, my whole fractal system is going to be screwed with something like that. It's like, wow. I mean, are you willing to share the best thing that you could come up with is some squirrely small to mid cap defense stock that has a ton of this embedded in it, and nobody knows about it yet.
Right. Absolutely. Yeah. I mean, I think, we believe that it's probably, the majority of it's in the hands of Lockheed and Northrop Grumman. So I think that those are great plays for that. They're great companies regardless. But we believe that they are sitting on that tech, that they actually understand the tech, that they've had that tech for decades. And again, this is a game changer. This is a game changer for the United States from a military aspect, and a game changer from the energy aspect. I mean, just across the board, it's very hard to unpack the implications of that coming out. And we would suggest to you, Keith, that 2023 is actually the inflection point. So right now, we have congressmen and women who have seen from the intelligence community and the military community. We have videos. There's a video that's 23 minutes long, that's high definition. And you've got senators coming out of seeing these closed session, meetings, and they're saying that it feels like they just stepped out of a Star Wars movie. This is happening right now. This is stuff that is known, that is documented. And the other piece that we'd say, and the reason that we think that 2023 is an inflection point, is because this also becomes a political piece of leverage. So it's a bit of game theory here that
Huge
if you
leverage.
look at like
You mean
huge
like
leverage.
against China and Russia?
Yes, not only against China and Russia, but also for a politician. So what you're already starting to see is and this just happened, and this was driven by what's happened over the United States with the shoot downs of, UAPs. And I'm not suggesting that those are, off-craft vehicles. Maybe they are, maybe they're not. I don't know. But we shot down a balloon. NORAD, for the first time in U.S. history, shot down, 4 things over U.S. airspace, only one of which we know, which was the balloon. The other 3, we're still not sure what it is, and nobody's actually provided the evidence of what's, crashed on the ground and in the water. What you're seeing politicians do is you're seeing the politicians starting to jockey for this conversation, because there's 3 or 4 politicians that helped get the National Defense Authorization Act passed with this language in it. So take a look at Marco Rubio. A couple of years ago, he was on 60 Minutes talking about this very thing just from a national security perspective. You're going to see, I think this is part of what's going to push the conversation, and the information is going to leak out a lot faster than it would have in previous years, because there's a political dimension to it as, politicians, position themselves accordingly.
Yeah, I mean, are you kidding me? Like off-world craft? I mean, as soon as one of these 5,000 Republican presidential candidates starts spouting off, why don't they start with that? I mean, they'll get some attention at least. And
they will.
It's particularly in this, like, how is it? And by the way, if you have questions, I'm actually a little surprised that we don't have a lot more questions so far, but it's probably because they don't know. If you have questions, obviously for pertaining to anything we've talked about so far, just fire them in the queue, and I'll ask them. But it's, the point that you made on, I was having a conversation with an investor actually about this the other day. It's like, how does, like, first of all, I don't believe that they don't know what these other 3 things are. I mean, do you believe that? Do you believe that?
No, they for sure know. They absolutely know what they are.
Okay, so they know what they are. Why wouldn't they be? Why? Maybe we did shoot down an off-world craft.
We have before. That's what, and what's interesting, Keith, for you is included in this National Defense Authorization Act, this is the other reason you're going to see a lot of information come forward, is that there's whistleblower protection. And so people that were part of secret access programs previously, that's a very, very delicate thing. You can't just come and jeopardize a top security clearance. So the protection in this year's legislation provides coverage for anybody that's retired or active in those. They can come to ARROW, which is I can't remember what the acronym stands for, but that's the government agency that's set up now to collect all this. You can now come forward and reveal that. And from what's being said, these people are coming forward. You have people that have reached out to Congress that were part of these, these secret access programs, and this stuff is going to come rolling out. So the idea that we don't know what it is, I mean, look, we have cameras in all these, all our military aircraft. All of them have it. You just saw yesterday posted from 60,000 feet up in the air from one of our spy airplanes, a picture of the balloon, the Chinese balloon.
This I was literally just looking it up. This U-2 spy plane picture, and it's got the, these things, they're there, right? I mean, it's not even possible that you would have with a pilot in it, something, you shoot anything down, including like a bird, without them not knowing what it is. To me, that's exactly right. It's absurd. And
that they can't collect it either is absurd, right? Like, I mean, and people are like, oh, well, the planes are going too fast. It's in harsh environments in Alaska. Well, you just fly a chopper over, drop off one of our own drones, and just hover down and go look at it. Like, there's way more information they have. I don't buy the narrative that they're selling us.
So people are probably thinking, do we shoot down like a Martian? Like, I mean, it's like,
maybe.
I'm like, my partner Michael Bloom is going to go off with me on this, because like we're on 2 different he's been amazed and fascinated with this for a long, long time, and I'm like, dude, I don't know. There's so much I don't know.
Interesting.
Wow. I mean, what you've already said, a couple massive things, like whether it be off-world craft or these biodiversity credits. I mean, these are just things that people don't talk about in markets.
Correct.
Like I'm sure that there's, like I'm the certified idiot that's for the first time just learning about it, but I'm certain that there's a much broader world talking about that than is actually trading Google today. I mean, it's got to be a fascination amongst many. So, Wow. Okay. I'll take the first question, from somebody else because I can keep going,
Sure.
obviously, with you on this stuff. Actually, this is kind of more of this is a in the weeds question because you did mention Signature Bank at the beginning
Sure.
of the discussion. So, any thoughts on that? Seems to be a lot of smoke around this one, similar, JW says, to Silvergate.
Yeah, so and with good reason, right? I think that Signature's got the same problems that Silvergate does. And just for people to understand, the tech that they were providing was really not any type of, breakthrough technology. What Signature and Silvergate provided to the crypto community was, one, just access to fiat dollars. That was by far the most important. But the way that they sold that to everybody as some sort of amazing thing and got their stocks lifted was that they gave you the ability to do transactions 24 hours a day, 365 days a year. But that's really not accurate. So Keith, if you and I bank at the same bank, okay, and the bank just debits your accounts and credits mine or vice versa, they could do that 24 hours a day, 365. They don't have to use the ACH system nor the FedWire system to facilitate that transaction. It's just internal accounting. So all they did was just turn on their accounting systems and leave them on all day long. That's how they attracted the crypto community. So I think that I haven't spent a lot of time on Signature, but for sure they have the same AML KYC holes that Silvergate did. Because if you're facilitating banking and for crypto companies, you're screwed, in my opinion. You're a zero. You're totally done.
I mean, willful blind. We talked about this through a different lens this morning. Our legal policy analyst Paul Glencher was talking about willful blindness. I mean, and
Yes.
That's not a defense.
No, exactly. Not at all. You're going to be wearing the orange jumpsuit.
Exactly. Well, this stock. I mean, I haven't traded this one. This is going to be in my. I can't believe I didn't know that either. I mean, I'd say that this is the highest percentage of in time spent in a conversation, in real conversations. This is the highest percentage of things said that I didn't know so far in 15 years.
I got lucky.
This is awesome, man. Cool. This is like more of a boilerplate question, and you've hit on some things. I don't know if you do have like the biggest risk reward opportunity that you see in discretionary macro, but do you have an answer to that?
I don't think that there's any singular trade. I think that it's a grouping of trades. Yep. One of the things that we're watching very carefully is China and Mexico. And I don't think that that's it's a completely original idea. We're moving into a world that's fragmented, right? Again, not new. We can see the conflict with China is increasing along with Russia and everything else. We do have, so even though we do macro, my team, we're actually based in Latin America. So we have a pulse for LATAM type activity better than anything else, just because we're actually living in these markets. And in Mexico, you can see it. So one of the interesting things with Mexico, to give people an idea for kind of the flow coming out of China and moving over to Mexico, is industrial vacancies right now is like 1.5%. So wow. you can't get a qualified, warehouse that's got, ports for you to bring your stuff in. I mean, it's all full. And there's a lot of stuff being set up down there. So Mexico's very interesting, and Mexico's got its own challenges internally, but that's a very interesting trade. I'll tell you another one that we did last year that's very cool. People can pull up and take a look at, and I don't think this trade is done by any means. Is one of our favorite currency trades last year was long the Singapore dollar and short the renminbi. Oh. So, so long SGD, short CNY. And if you pull that up and take a look at it, the thesis behind that trade was that, we've traded Hong Kong, assets, equities and bonds and everything for a long time. And over the last 6 years, we started tracking, Beijing's encroachment on Hong Kong, which is to us now, Hong Kong's just screwed. It's like, it's done. Its years as a financial center are completely over in our opinion. And so we asked ourselves, if that's the case, where will money go regionally? And Singapore, being Hong Kong's, best competitor, was the logical answer for that. So we said, as wealth squeezes out, because normally that wealth squeezes through Hong Kong from from the mainland to Hong Kong and then out to broader markets. We said we think that money, a lot of private wealth, is going to get redeposited in Singapore for convenience and familiarity, and that's going to create some pretty heavy flow out of China that routes down into Singapore. And to us, that was a great currency trade. I think you're going to see some similar things with carefully looking at the Mexican peso versus the renminbi, which is a little bit nicer because you can get some positive carry there. The Singapore dollar trade was a negative carry trade, but it had enough movement in the exchange rate to more than justify it. Mexico, you can actually get some very nice positive carry along with that. So Mexico's an interesting macro trade that has got a lot of pieces that can be analyzed off of it.
Yeah, that's obviously a big theme. Do you often express it in FX and not in equity, or do you do both?
We do both. So It just really depends, but we do use FX a lot.
What do you think about long China? I'm currently long China. I've been, after being bearish on it for 2 years. It started out nicely, and now the moving monkeys are all yelling at me because it lost some momentum. But I had an interesting conversation with a client yesterday where his clients were yelling at him for taking a 2% position in China, based on because we went bullish on China. So he's like, and it's been a while for you. And I was like, the amount. First of all, I started laughing. I was like, really? Like, you guys had to it's basically an asset manager telling me that it's not worth their time to have to answer to angry clients for buying anything China. I was like, wow. Right. Okay, well, as a new bull, I guess that's a good indicator, but. What do you think about that? What do you think about China? Not about the example that I gave, but what do you think about long China here?
Yeah, so I think it's interesting.
Equity, I'm talking, not bonds or currency or anything like that.
Yeah, so I think the bull case would be as follows. Interestingly enough, a lot of people don't trade, Taiwan, but Taiwan's stock market's up, I think 11-12% for the year, year to date. Yeah, it's been good, been a good market. Most people would think that, wouldn't even think about it. So I think that China's going to have to stimulate. Right, which will be, will put a lot of liquidity into the equities. I think that as they fragment, is that we know that there's been a bubble in Chinese real estate, that's been evolving for a very, very long time, right? So that's a negative, but the fundamentals of flows for that is very interesting. One of the reasons the Chinese real estate, had a bubble in it was because there weren't a lot of options for the Chinese for where they could put their money. Right, so they've got a closed system. You can't really get money out of the country so easily. That's going to be applicable to their stocks as well. So their stock market, as they start to stimulate, and Chinese are looking for something as an alternative versus stuffing it in real estate and buying a second or third apartment in a ghost city, then you can make a very bullish argument for money flowing into those equities. So I think that there's a very reasonable short term to midterm trade there. Yeah. I talked to a guy, I'll get you his name. I actually talked to a guy the other day that I just met. He's at ICBC in Hong Kong. And he had one of the most interesting, macro analysis on Asia that I'd heard. And, his view in summary is that the real estate issue, set aside all the geopolitics related to China for a moment, and just the, this slow moving train wreck that's still, accumulating from the real estate sector is going to cause, 2 lost decades of growth in China. Very interesting guy. I have to get you his contact information because he's much more knowledgeable being over there on it than I am. So that's my kind of limited view on it. Yeah, the problem, that's obviously my main problem. If you take the secular, the demographic, the long-term issues in China, you definitely would not be long of those. And here I am, long it. I mean, locally it's interesting. I mean, Shanghai, Shenzhen, Shanghai Composite Index hit a new cycle high only 2 days ago. So. You see it on that volume side, you see a lot of what they call northbound connect volume, right? So you're seeing, whereas the real, panic, and not even panic, but it's just like, I can't be wrong on something like K-Web for like 5 days or people lose their minds. But it's not the same. It's like US listed. So it's an interesting one. I got to ask this question before we go. I knew we were going to get questions about like, aliens. All right, so inevitably, yeah.
It's a good question because I don't know shit about aliens. Like I don't know. I've never even. I'm just going to embarrass myself once again, but I haven't even watched X-Files. Okay. I mean,
no worries.
But Malcolm Hamilton. Okay, he says if aliens can navigate the universe and come to Earth, wouldn't they be able to avoid our attempts to shoot them down?
Okay. So
you actually have an answer to this?
I have, believe it or not, yes. crazy as it sounds. Yeah, no, I'm telling you, we've spent a very unusual amount of time on these very things. So so if you guys want, so here's a couple resources to answer that question. There's on the is either National Discovery Channel, National Geographic, one of those channels. You can find it. There's a show called Unidentified, and it's a documentary series, and they kind of go through these different things. And it was done over the last couple of years, so it's current. And one of the things that we know from records, and not just in the United States, but internationally, and so there's an episode on there that works with UFO investigators in Italy, is that we do know how to track the signatures on many of these craft. So we know how to spot them when they transition into our atmosphere. One of the things that we've learned how to do is spot them when they transition from our atmosphere and into the ocean, and vice versa, from the ocean back into our atmosphere, which is pretty wild. So these things are moving around in the ocean a whole bunch, 400 knots, per hour, faster than anything else we have. Yeah, mind-blowing stuff. I know, absolutely mind-blowing. So we do know that us and Russians have shot these things down over the years. One of the questions is, and we also know that they play with our aircraft. So if you go look at the best documented one most recently, which is the USS Nimitz case, which was in 2004 off the coast of San Diego. That's the biggest case that's been in the news. Like, everybody knows that one. Those guys, the pilots that were involved in that have been on show after show after show after show, super credible pilots. And in those situations, the UFOs just quite literally just ran circles around them. They couldn't even get close, forget being able to shoot them down. So we do know there's instances where they've been shot down because we can track some of their signatures. And we know there's instances where they play with us. And there are reports suggesting that we've been allowed to, that they have the capability to just zip off, but they allowed us to shoot them down. Now, is that because they're passing technology to us? Who knows? Maybe. That's one theory. So there's a lot of strange stuff when you go down this rabbit hole. And again, we're data driven. We want to look at not just X files here, but we want to actually look at data and say what the hell's going on here. So you're seeing a little bit of all of that. So yes, they have the capabilities, but it does seem that we've successfully taken them down as well.
Wow. Okay, I have some binge watching to do this weekend.
Yeah.
Last question, sure. And this one actually is one of the few things I do know something about, which is uranium, and you mentioned it. And there's some questions on that. So just to finish, what are your thoughts on being long uranium here?
To be fair, I'm always wrong on it. So
it's a tough one.
Long term,
it's
a very tough one, right? It's very hard to trade. What I would like to see is, and I think it would be great to have a proper derivatives instrument for it. I'd like to see a well-developed commodities futures market for it. I think that would support it. And we don't have that yet, right? That's just it's not really existing. So yes, I share the bullish thesis, I'm sure, for the same reason as, everybody. I don't have a unique view on it. I do think that it's interesting, paying attention to Japan. And this was through the conversation with the gentleman the other day from ICBC. He lived in Japan for 10 years. And what he was noting is he said, keep an eye on Japan, getting nuclear turned back on, because it's such a big component of their inflation metrics. And I thought, that's interesting. I haven't really dove into that to piece that apart. And you guys are experts at this type of stuff. You guys know how to dismantle these things and really dive in. So I think that, we need it. We need nuclear more than ever. And this is part of, one of the other things that we're spending a lot of energy on right now is trying to pick apart, in Europe, we've got the Fit for 55. And because we trade environmental assets, we're also trying to take apart the Inflation Reduction Act in the United States, and I always joke that's ironically named because it's probably going to cause inflation rather than reduce it, but as most government policies would. But hopefully within that, we will see a resurgence of nuclear facilities. We need them. There is no possibility in our mind other than UFO technology, right? But there is no possibility of getting to a green, clean future without nuclear power. And it's an obvious thing to have. So we remain bullish.
That's cool, man. Well, I want to be long of nuclear power, uranium, and I don't want this anti-gravity thing coming into my world anytime soon. But that doesn't mean it won't. Thanks for coming into my world, like into the Hedgeye Nation community. I mean, it's this is easily like I frequently get to meet somebody like a great macro mind, as I think many will now conclude, that you don't just get to meet people like you all the time. Thanks for just like. Just taking everyone in a real definitive way into a go anywhere macro conversation, and I'll look forward to the next one if you'll make the time. So thank you.
Absolutely, Keith. Honor to be with you guys. I appreciate it.
Awesome. He's David Dorr. Now, like, who's not gonna follow this guy? I mean, first of all, he's not. I mean, I think his Twitter count. I'm gonna make a call. My big macro call is that David Dorr's Twitter count, his follower count, is gonna double like now. Okay. Thanks for joining us.